I'm chatting to Stephen Saad, the CEO of Aspen Pharmacare. Stephen, always good to sit down with you.
No, good to see you too, Bronwyn.
Obviously, you are exposed on Rand, Aussie dollar, and Euro. That's the basket of currencies that most impact you.
Well, it certainly did keep us awake last year. I learned something about Aspen I didn't know, which I'd always seen Aspen. Aspen is a Rand hedge stock. And what we realized was when the dollar appreciated, and the Rand over that period appreciated against all our major currencies, we had quite a bit of exposure. We fixed that in this set of results, and you'll see. And so I think our exposure and EBITDA level is almost negligible to the US dollar. So to the extent the euro and the Australian dollar appreciate against the Rand, we're in a good space. I think also our long-term strategy is we've clearly got a plan for the US.
This is the HPC injection, which you have said that you will launch in that territory somewhere in this period to June 2016.
Yes, and it goes a lot beyond that. There's many other things we're hoping to achieve. We've got a lot of other niche IP, and we're seeing a real opportunity for ourselves in the US.
This is the next frontier for you, the US.
Yes, US and China.
China, let's chat about the infant formula business. Can you give me some sense of what is happening and the opportunity in China?
So the aesthetic opportunity on infant milks was babies were, there was relaxation on how many babies you could have in China. The market was going to grow. Every analyst had it growing at double digits. And we believed that. And then we did our due diligence. We went in, we looked to acquire them. We've done our due diligence. And the prices in China are higher than anywhere else in the world. And the way to market was quite complicated. Which with a whole lot of markups along the way. And I just didn't think it was sustainable. And I must tell you, each time we went back for the due diligence for each iteration, the profits just coming down and down. And then there was quite a bit of government intervention as to what is acceptable, not acceptable in a formula, and what you'd have to actually manufacture in China. Quite complicated, quite complex. The reality is the bubble burst. So there's a lot less profitability if you look at all the big listed companies in infant milk formulas. And it was not a good time to be buying them. There is still an opportunity, of course, because there are more babies, but you've got to get your route to market right. And, as I've said before, sometimes the best deals you do are the ones you don't do.
With your geographic footprint, it's a complicated group to analyze. But if you look at South Africa, Sub-Saharan Africa, Asia Pacific, you've got, and then your international business, which is really Europe and Latin America.
Yes.
You have made specific mention of Venezuela. Yes. In the results, and many are probably going to say to you, do you think South Africa is going to go the same route as Venezuela?
No, I don't think that. I mean, Venezuela is a very sad case, a really, really sad case, dependent on only one commodity. I mean, if you think about South Africa, when the commodities crash, because we import oil, there's always some balance. It's not like what I've seen in Russia and Venezuela, and Nigeria and Angola. In Venezuela, 97% of all the income comes from oil. The policies are incredibly socialistic to the point where you're sitting at 5-star hotels and they haven't got milk. And so I think there's lessons to be learned.
You quote economic and political uncertainty in Venezuela.
Yes.
And as you said, that's an extreme case. In South Africa, many people reporting their results will say economic and political uncertainty in this environment. But you're saying to a lesser extent because we have a more diversified economy.
We have a much more, and there's a lot more checks and balances that come in. So if you have a look what happens in our court process, at some point, something gets caught up. So I think we've got a very strong constitution. I'm definitely not negative on South Africa. In fact, I'm positive. And I've heard a lot of people complaining, but we spend years trying to get 2 and 3% more productive. The reality of our business now is that overnight, when the Rand appreciated, our whole export business has taken another whole new look.
It's a huge opportunity for you from a manufacturing perspective. Correct. Your Port Elizabeth plant and your Durban plant, potentially going to yield incredible results for you going forward. In fact, would you boost your manufacturing capabilities in South Africa?
We are. We're boosting them, and it's international players come. They love our production. I've had major multinational there last week when I was there. And there's such positives on what comes out of our business. And so there's an opportunity for us. And yes, we are boosting our production, and I would think that exports will become a larger and larger and larger portion of our South African business. So we're spending a lot on CapEx. We've spent so much on CapEx, but pharmaceuticals, you just need so much patience, which I'm not great at. But these plants come online slowly. They're 5-6 years down. But we spent this money 4 or 5 years ago. So our production's coming on, particularly our exports, both in chemicals and in Cape Town, out of Cape Town, and in our pharmaceutical business in Port Elizabeth.
Let's talk about your working capital and the impact that that is having on your cash reserves. Obviously, cash on hand going up from 6.8 billion to around about 8 billion, but you have made mention of the fact that you are requiring more cash in the working capital cycle. Can you explain that or unpack it for me?
Sure. So we report everything in rands. The reality is we should probably be reporting in euros. But when you look at rands and you say, okay, just look at our total debt, for example, it's gone up in absolute number, in absolute rand terms. However, when you look at it in dollars, we've brought our dollar debt down, we've brought our Australian dollar, so this is US dollar debt, our Australian dollar debt down, and our South African was about the same. But overall, so if you say, how much did you bring your combined dollar debt down? It's about 2.5 billion rand, and our South African rands went up 300 million. So it came down. But when you convert all of that to rands, there's about a 6 billion rand effect just in the currency movements. In working capital, a lot of things happen to us in working capital. Some of it is of our own making, I believe. So there's work we have to do operationally, so I'm not going to make any excuses for that. But however, when you acquire a product, like we acquired a product and we ship manufacture this Mono and Bolex out of Europe, well, you've got a whole stock. So you bring a whole lot more stock onto your balance sheet. So we've got quite a bit of stock on our balance sheet, and I do believe there's a chance to eke it down and out. There's an opportunity to decrease our working capital. Of course, we've got no control over how it turns out in rands, but to be quite honest, we don't ever look at it in rands. We just, at the end of a period, you translate it, but we look and see how much stock do we have in euros. And
so holding higher levels of stock, does that mitigate against the risk of manufacturers not supplying you timeously?
In this instance, it was because we were changing to get to a better source of supply. But a lot of what we've done now, so the processes before we had generics and you could get the API, bring it in for that's a chemical, have 2 months stock and hold it, that's one thing. But the processes that we're running under our biologicals are so complex that the whole gestation period can be up to 2 years. So you've got to know 2 years, you've got to order now for 2 years' time. So you're going to hold more just because of the period.
It's a difficult supply chain process, effectively.
It's a very difficult supply chain process and a very difficult operational process, because you never always start with the same product. It's never the same. A chemical's always the same to start, but in a biological, because it's live, it changes.
Brazil recently downgraded to junk status by Moody's. So Latin America becoming something of a thorn in your side from an economic environment. What do you think is going to unfold in Brazil, specifically for your business, even though you mention repeatedly that medicines are defensive in nature, so not necessarily impacted by economic cycles?
Yeah, the medicines are defensive, and across Latin America, our biggest territories are in Spanish Latin America, by far, and we've done very well there. And I mean, the Mexican currency is strong relative to the rand, so it's been okay, but then the Colombian currency hasn't been so fantastic. But we've done well in Spanish Latin America. Brazil's only a small part of the business, but if you ask me what I would do in Brazil, it's a good time to be. Personally, I would be buying in Brazil and Russia right now. I think now's the opportunity, because like South Africa, they go through ups and downs and a change in commodity price and quantitative easing, and suddenly everyone thinks they're the flavor of the month. The reality of all the emerging markets, almost all of them, in our industry, there's volume growth. And there's more usage. And when I look at places like Europe, there isn't volume growth. So you've got to try and take market share, but there is volume growth in emerging markets. I'm very happy with the balance of the business. And yes, there's going to be ups and downs.
You speak about the refocusing of the business, divestments impacting the results, and the focus really being niche in the therapeutic side of the medicine game. Can you, again, give me a little more clarity on that?
Sure. So when you look at the Aspen business, in South Africa, we are all things to all people. We're one of the largest in the branded consumer, OTC, generics. We actually got this big basket. It's not possible to replicate that strategy across the whole globe. Across Australia, we've done very well, and we exited those parts of the business that we thought would digress that management team's focus, and we didn't know how we would grow it at the same rate relative to what we saw in Asia, because Asia is an absolutely core focus for Aspen now. So we wanted to free up management time, because I also don't like the bureaucracy. When you have these very broad portfolios and you get lots of middle management and lots of PowerPoint presentations and not a lot of action. So
when did the divestment process start?
It's been, it started a couple of years back. By the time it's finished, it's only finished now. So there's a whole process. You go through it. Do you like it? Don't you like it? The negotiation, and then there's a whole transition process. So we finished that. So now that management team is free now to do what we really want to focus on, which is on Asia. Because that, in part of our Asia Pacific, that's got to be a lot bigger than our Australian business. So we don't like that sort of loss of focus. And yes, divestments could be seen as earnings dilutive. And they are, but you don't see the value you get by the focus. And you start to see it now when I see, what happened before and after the divestment. Each market has grown. But you can't be all things to all people in the markets. And what we're trying to do is say, okay, we wanted some niche products. We've got some really great intellectual property. How do we harness this intellectual property in a global way? And so we try and stick to anticoagulants or infant milk formulas or women's health or pain. It's something that we think we've got a global skill. So it's not just a me too. It's not making another paracetamol tablet. It's a skill that we've got we don't think many other people would have.
Will that refined focus lead to better things on the results side in the next 6 months?
So that focus is all critical. If you have a look at us relative, there's been lots of stories about specialist pharma and the high prices in the US, and they've done this, and they just go from one acquisition to the next without integrating. If you have a look at what Aspen's done, we're in a very expensive industry. Pharma globally, nothing is cheap. So we've never bought anything that's cheap. I wish. But what we have done, even if you take Sigma in Australia, we've taken the businesses, we've managed to enhance sales, address supply chain particularly, do line extensions. We've never really ever issued equity to achieve that. We've done that through our own cash flows, which I think is quite an important difference. And that's where, that's what I think really differentiates us, is our ability to extract synergies. Now, those big transactions we did, it took quite a bit to settle them down. And believe it or not, people are the most important. Never mind, we spent R1 billion just on IT in Europe last year. But it's the people challenges that are your biggest challenge, to find people that fit your culture. And, the reality is you want your business to be for everybody, but Aspen isn't for everyone. So that's been our biggest challenge, is to actually get the people in place. Now, those synergies out of those transactions, that's what you're going to see between now and 2019. Now, we said it's going to be 2.5 billion. Now, people think you're going to extract we're saying 2.5 billion annually. So
2.5 billion annually.
More than 2.5 billion. That's what we'll extract over the next couple of years, at least, out of the transactions that we've done. And that helps pay those transactions. At the end of the day, that all falls into your cash flow, and now you can be ready for the next one.
Your foray into Japan, it's a recent one.
Yes. Look, it's had a good start. It's a very interesting market for Aspen. Older people, pressure on healthcare. We've managed to get authorized generics or market authorizations from GSK, and there's a lot of pressure on being able to be sort of everywhere. Quality medicines affordably. And is it going to be a star performer within the group down the line? I think so. Yeah, I hope so. It's certainly going to be a big part of our future.
So Europe has been good for you.
Fantastic. Beyond our expectations. And we had all this focus on anticoagulants, which have done really well. But by basking it together with our women's health products and oncology products, those, saying, look, if your women's health, you're having a cesarean, you better use this product for your blood clotting. But we've had a broader basket of women's health products that have also benefited. And so we've seen over 24% growth in that portfolio.
In terms of the business over the next 5 years, you've already indicated the focus and the benefit that will bring effectively to the bottom line. What do you see your future with the group being? This is your 18th year?
Yeah, I think so. That's good. Yes, 18 years. So look, my future, I don't see an end to my future. But what I do see over the next 5 years is, I think back where we started, we had South Africa and we saw some opportunities. In Australia, and we saw some opportunities. If you look at where we are now, we've got over 70 operations around the globe. So we've got someone sitting with an Aspen calling card in Latvia. We've got places that I'll never ever get to in my entire tenure of Aspen. But we've now got this fantastic base, and what people might underestimate in Aspen is how much time and focus it takes to set up trade routes, to set up operations, to set up IT structures. What and just the whole supply chain structures that are involved with getting this operational. And we've got that structure. And I'm saying and what I say to our teams is, if we could achieve this off this base with only South Africa, or this base with South Africa and Australia, we've got a much bigger opportunity now with 70 operations. We can filter a lot more into our own organization. And Aspen is quite big by South African standards, but by global standards, we're absolutely small. We're not a speck in the pharma market. So there's a real opportunity for us to grow more broadly globally, and that is our plan. And there's really opportunities, and this is something which we're going to focus on and grow. So I think that we're very excited about what the next 5 years will bring.
So you look at your share price over the last 5 years, 274% you've basically generated for shareholders. Your infrastructure is set. The regulatory environment has been finessed. And now you're poised for that extraordinary growth of the internationalization beyond the existing moves that you've made.
I always find it hard to talk about share prices. I mean, the share price was 53 cents when I started. So it's grown exponentially, and then GSK sold their shares, and
it was a little bit of
an
overhang.
and then it just dropped, and now there's this overhang of.
All we can do, 6%
yes, all we can do is, and I've learned this because I've been at 60 and it dropped to 13. But overpriced, underpriced. All we can do is deliver operational performance, month on month, half year on half year, year on year, and that's what we focus on. And I can't tell you whether it's cheap or expensive relative, but all I know is we're really excited. And when we're excited, then it's normally a very good thing. There's a lot of opportunity for Aspen. Depreciating rand has helped us in terms of our exports. Yes, it's negative for our South African business, but a lot of it's now hedged in the state tenders. But it creates a lot more export opportunities for us. But our global business is really, really pumping, and there's plenty more opportunities for us. We've got a great infrastructure and base to grow it off. What you don't want to do is not have solid foundations. You keep on and keep on. We've solidified that, and it's not easy when you're bringing thousands of people on into a business. We've changed every leadership, every leader across Europe to get to where we are today.
Let's talk a little bit about GSK, and you mentioned the damage that did over a short period of time to your share price, and I know you can't manage the share price. So they went from 18% to 12% to now 6%. And a lot of the concern has been that there's still a 6% overhang because GSK wants to dump that next 6%. Is that a reality? What is your relationship like with GSK?
No, our relationship's good with GSK. I must tell you the second tranche that was sold was a bit of a surprise. And certainly I would not expect future surprises from GSK. So
a solid relationship.
To the extent that we keep a GSK person on our board, even though they're not entitled to have that position because of their shareholding. So that's a voluntary thing from our side. So I think we can't give you a better demonstration of that relationship than that.
This is a bit of a wild card question, but given that 77% of your business is outside of South Africa, should you really be reporting in rands? And you alluded to it earlier in the conversation. Should you be JSE listed?
Should we be JSE listed? Well, if I didn't have to be listed at all, that would be great. That would be prize one. Very happy to be listed on the JSE. Remember, I'm not even from Johannesburg.
So a Durban Stock Exchange.
Very, very comfortable with where we listed. There's not a lot of value for Aspen to be listed offshore except to create more reporting requirements and more distractions. We're a very operationally focused company, and where we've been really fortunate is because we've been so successful overseas, we've generated all our capital offshore that we've been able to utilize to grow and increase our business organically. So we don't need to go.
You're not going to be changing your structures anytime soon.
No, absolutely not. Not if I have any say in it.
And you've got a lot of say. Let's talk about your leadership style. I'm not going to spend too much time on the softer elements, but you have mentioned that there are parts of the group that you're never going to get to in your lifetime because of the magnitude of this animal that you've created. How do you lead? It's got to be a decentralized model, I'm assuming.
So we've got very few people in a head office. I've told the people globally, look, I'm from Africa, so I only can understand 5 big things. You tell me the 5 big things in your business on one page, and you talk to me through us and you show me you fully understand your business. Because if you're looking at a lot more than that, sure, we've all got 100 things to manage, but there are 5 things that move the needle. I want you to tell me what those 5 things are so that I know that you can run your own business. Our model is very decentralized. We don't like bureaucracy. And, you know, a lot of people think they want to run their own businesses and run their own space. And then you put the light on them and then they actually don't want to. That's why I say it's not for everyone. Most people think they want to do it and they get, oh my God, they freeze when the light comes. And then some, they just go for it. And we've got a lot of guys that just go for it and have done it. And it's been a culture that's come right through our business.
A highly entrepreneurial culture.
There's all our guys are thinking all the time on their feet. And they've got, you know, we've got a motto, to rest is to rust. And really what we try and say in that, what we're saying, obvious, besides the fact that there's quite a bit of rust in Durban, you've got to keep moving. But the obvious, what we're saying is that in life, if you want to create more opportunities, I mean, to be able to, you need to harvest a lot. To harvest a lot of fruit, you need to plant a lot of trees. It's a simple story of life. And so we create plenty of opportunities. So right now we look at so many opportunities. And if we get a percentage right and come through, then we continue to grow. And so we just like to keep moving. And it's a highly energetic environment, and leadership style, really like to talk to the people broadly, talk a lot about what we stand for, what we do. And it's a very positive environment to be in, not just because you're growing, but, you know, there are worse things in life than selling medicines affordably to people. So it makes it very easy to relate to the topic and to do it with passion for everybody to want to do it.
You're quick to point out that you're not from Johannesburg. We know you're from Durban. You could live anywhere in the world. Why have you chosen Durban?
Well, I wouldn't move anywhere. It's definitely the best city in the whole world.
How much time do you spend at home?
No, a lot of time. I spend a lot of time at home because our structures are decentralized. We do video conferences. And I do speak broadly to audience. So I go and talk to all the reps in Prague, you know. But then it's people have all got earphones like United Nations on their ears. And I've learned little tricks there. So, Bronwyn, you don't tell jokes, because first time I told a joke and the people who understood the English laughed, and then these people laughed, and then I realized the French had just translated it, and then while I'm saying something serious, the Bulgarians are laughing.
It's safer at home. It's just it's safer to stay in Durban. What about the fact that you are potentially an acquisition target, coming back to the business side of things? Because again, you've pointed out that you now have strategically positioned the business, and from that you're going to be able to leverage into the stratosphere.
So we're definitely an acquisition target. I mean, I can say that. I don't think I'd be saying anything out of turn by saying that. We very much.
Do you get approached on a regular basis?
Yeah, and we are definitely an acquisition target. If I can talk personally rather than as a shareholder rather than, this is a decision for the board. But I just don't think that it would be a wise decision to be selling control or selling out on Aspen right now. We've just got so many things that we're doing and we want to do, and so much to harness, and it's quite an exciting period. I think we're going to be going into over this next period. So, but I told you that 5 years ago and 10 years ago, Bron went up.
And you haven't been wrong. Anybody who's been on the Aspen journey is staying with you. Stephen, thanks so much. I think that's an appropriate place to leave it. I've been chatting to Stephen Saad, the CEO of Aspen Pharmaceuticals.